Hello and welcome to the BlockSolid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate and technologies as we know it, and how we, the owners, the buyers, the renters, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CEO and co-founder at SolidBlock, a pioneer startup in real estate tokenization, and I'd like to welcome Simon Barnby of Archax. Hi, Simon. How you doing?
Hi, Yael. Great to be here. Thanks for inviting me.
Absolutely. I've known you for a while because we're always at the same events. You're one of the OGs of this, the European part of the world of tokenization. So I'm super psyched to talk to you about things like regulation, compliance, why we need digital securities, and your journey, which I understand took a few years to set up things with everything going on in the market. And so, shall we get going?
Yeah, sure. Sounds great.
Amazing. So you are the CMO at Archax, which is a digital asset exchange. Can you tell us what that is and how that's different from any traditional exchange?
Yeah, so I guess to give you the full picture, we're a regulated digital asset exchange, broker and custodian. So we have kind of permissions covering all those three things. We're regulated by the FCA, the Financial Conduct Authority here in the UK, and we're regulated for digital assets. And the reason that's important, as a bit of background, myself, the founders of Archax, in fact, most of the core team here come from traditional financial markets, but watch with interest what's been pioneered in the crypto space by cryptocurrencies like Bitcoin. And we're not saying particularly that what we're doing is all about Bitcoin, but what we do see the benefit of is the underlying technology. So DLT, blockchain technology, concepts like tokenization are clearly much more efficient ways to run the financial markets. And we believe in time, all traditional financial markets will adopt this technology. So we see it as a technology that's going to disrupt and revolutionize financial markets. And really the concept behind Archax was when we looked at the crypto space, most of the players there were very retail focused. There weren't people building institutional grade solutions, and there was a lack of sort of regulation in the space too. And so our journey, and you're right, it's taken a few years. Getting regulated and building institutional grade products does take time, but our journey has been all about, okay, well, let's build our solutions regulation first, institutional grade, and package up products and services that kind of leverage what's being pioneered in the crypto space, but deliver products and services that are palatable to the regulated traditional institutional financial markets world.
Got it. So you're talking about technology and how it's going to be likely used by all the traditional financial systems. So what exactly from the technology, from the crypto world that you mentioned, that you guys all saw, and saw the light and said, wait a second, we can use this for, this kind of traditional trading. How does that technology make it better, make trading and other financial processes better?
Yeah, I think if you look at traditional financial markets, the actual trading process is pretty electronic and pretty fast, and has been like that for a while. But actually, in the post-trade space, it's pretty inefficient. There's a lot of manual processes still in many areas. Everyone has their own books and records. There's lots of reconciliations that take place. Discrepancies. Post-trade is not as streamlined and as efficient as it could be, and that's probably really where the benefits come. We have on the Archax exchange, things can settle instantaneously. So, they settle and clear instantaneously. So, leveraging blockchain technology where whenever a trade takes place, everyone can get access to the same records, the same books and records, the same post-trade information at the same time instantaneously, has the potential to really sweep aside the inefficiencies in the post-trade space, make it quicker, faster, less expensive. Now, there are some regulations that will have to evolve for that to be fully realized, but we believe that will happen over time. So that's kind of it's really the efficiency gains. And, there are other elements that kick in as well. Being able, democratization gets talked about a lot, opening up assets by tokenizing them to broader communities, developing products and services that are global in nature, again, pioneered in the crypto space. So, and on a number of fronts, just a better way to run markets.
Very cool. So let's talk a little bit about books and records since you mentioned it, because I don't think the majority of the listeners, either in the blockchain or the real estate world, maybe in the financial world, know what that is, but it does sound like something accounting related, ledger, so it does seem like blockchain will have a good fit with, solving whatever inefficiencies you're talking about in the books of record space, especially if everybody has their own books, right? The books, kind of the accounting term. What exactly is books and records in the trading space, and which role does blockchain play in that process?
Yeah, I mean, if you kind of look at, stock exchanges, for example, when a trade takes place, there's then a whole post-trade process that then has to occur. There's lots of intermediaries involved. You've got sort of clearing houses, registrars. There's a lot of people involved in sort of those post-trade activities to actually move asset from one place to another and move the money in the other direction. So there's a lot of kind of people involved. There's a lot of activities involved. And as I say, that's where you can get these discrepancies. That's where, you end up having to do reconciliations. And, that's where the inefficiencies come in. So it's not manual in that people are writing stuff down on paper or anything, but there's people involved and there's intermediaries involved and processes involved and discrepancies because of people are maintaining their own records of what they think has happened. And that's where discrepancies can happen. And really that's where blockchain steps in, because you have this single source of truth, this immutable record of something that's taken place that is broadcast out to everyone who's got access to the blockchain and can see it all at once. So it's really a big efficiency gain. It means you can instantaneously see what's happened and there is no discrepancy around what happened because everyone is looking at that same immutable source of truth.
Wow. I mean, when you're saying that, kind of these light bulbs are going up in my head. We've been around with this technology for now 12 years or so. And we've seen how Bitcoin operates, and there's a single source of truth. Somebody says, I sent you the money and you didn't get it. There's no question about whether or not the transaction happened, right? So it's mind-boggling how inefficient the market still is. And I don't think people think about it. I certainly didn't realize that this manual reconciliation is still going on because there's other technologies out there, right? But it seems like nobody really trusts anybody else's ledger, right? Is that why everybody kind of has their own books and records today?
Yeah, it is. And it's partly that and partly, regulations dictate that all these intermediaries need to be involved. And I think, it's a little bit like, if you kind of look at the way we consume music or films, we used to buy records, vinyl records, then we bought CDs, then we downloaded files, now we stream it. The music stays the same. Okay, you get different genres and stuff, but the way we consume it has completely changed, and companies like Spotify and Netflix have revolutionized the way we consume music and consume videos, films and TV and stuff. And I think it's the same, this is the day for financial markets. It's happened in retail with the likes of Amazon. It's happened with, accommodation with Airbnb. It's happened in taxis with Uber. There's all these examples of businesses that have leveraged technology to revolutionize a space and completely change the way we do things. And really, it hasn't happened in financial markets. On the trading side, as I said earlier, that is electronic and fast. That's fine. But beyond that, there's a great opportunity to really improve things and revolutionize that space, leveraging technology, and blockchain is delivering the technology that can do that.
Fantastic. So you touched upon regulation and regulatory requirements for everybody to use certain intermediaries. So talk to me about the UK regulation in terms of digital securities, and what have you guys done to kind of move the needle to where you are today?
Yeah, so the regulation that we have in place, as I mentioned, we're regulated as an exchange, a broker and custodian for digital assets. So that means, on our exchange, in our custody service, we can hold and provide trading and custody for cryptocurrencies like Bitcoin. We can also hold regulated digital assets. So if someone tokenizes real estate or tokenizes a fund or something, that resulting token, unlike something like Bitcoin, that resulting token is regulated. It's in the eyes of the regulator, it's regulated. So you have to trade that on a regulated market. I mean, we can actually handle traditional assets also, but our focus really is around the digital piece. And then on the trading side, we can do it. On the custody side, we can do all those things. And I think if you kind of you see what happened with FTX. There's the crypto market is in pain still from what happened there. There's nothing wrong with the cryptocurrencies per se or the technology. That was just bad corporate governance, doing things wrong. It was, I don't know whether it was really a scam, but anyway, it was certainly fraudulent stuff going on anyway. And I think, our approach to all this has been, okay, we're going to do things in the institutional way. So everything we do, we institutional controls and processes in place. Our custody services insolvency remote, so it's completely separate, segregated structure. So if Archax went to the wall or whatever, people's assets are safe, they're sitting safe, they're held one for one, we don't do anything with them. And I think it's that approach, to doing things the right way. And even with unregulated instruments like Bitcoin, our exchange treats them as if they were regulated. In our custody service, we treat them as if they were regulated. So even for unregulated assets, we apply regulatory principles basically and do things in an institutional way. And that's kind of our differentiator. We're not trying to compete with the Binances of this world who are very retail focused, but what we are trying to do is do things in a way that makes an institution comfortable with getting access to some of these new instruments, new products, and leverage this new technology.
Got it. So when you say in the institutional way, I'm guessing that means doing things in a way that's acceptable to clients that are institutions. So that means reporting, that means certain grade of IT and crypto and other types of securities, right? What other elements are there, like insurance maybe, or?
Yeah, it's all of those things, really. It's providing all of those things. I mean, another example, on most crypto exchanges, if you were an institution using them, you would have a trader trading on that market. That's fine. But that trader could take all the Bitcoin that he's trading and send it off to another wallet. Those kind of, in the retail space, that doesn't matter because it's people with their own money and doing their own thing. But as soon as you're in an institutional space, they are regulated institutions. They have to make sure that no one can defraud the bank or do anything inappropriate or wrong. They need to be sure that everything is totally secure and protected. And most sort of crypto markets don't have those kind of controls and processes and features in place. And that's kind of our approach is, to our crypto exchange, for example. It looks like a more traditional exchange, so it's very acceptable to an institutional client. It just happens to have these new digital crypto instruments on it.
Got it. And are you only onboarding institutional clients or also retail or individuals that are qualified investors?
Yeah, so our permissions that we have from the FCA mean that we don't have retail permissions, for example. So our focus is we can face off to individuals, but they have to be qualified. They have to be able to qualify as a professional or sophisticated investor. So they go through a set of qualitative and quantitative questions, and if they can meet those criteria, then they can join the exchange. So we do have, individual people can use our products and services, but our focus is very institutional too. So yeah, and if retail want access, then they can, but they would go through a broker. So a broker that could be a member of our exchange would have retail permissions, and that would be their route in. In terms of being a direct member of sort of the Archax ecosystem, you would need to be a professional investor or an institutional.
Understood. And can you do primary offerings or only secondary?
Yeah, so our permissions, we have broker permissions too. So we can do primary offerings as well. And we actually have a primary platform. So someone can come to us and raise money with us and kind of leveraging our investor network. And then once they've raised the money, then we can provide them with a market to list on for secondary trading. And throughout the process, we can provide custody. So we can hold the money coming in for their primary raise. We can hold the tokens that are going to be issued when the primary raise is complete. And the brokerage permissions that we can't give advice. We don't have advisory permissions, but we can sign off financial promotions, and we have arranging and dealing so we can help firms raise money. And that's our primary platform.
All right, fantastic. What kind of advisory services would a client need in order to get onboarded?
I mean, if someone is going through a fundraise process, in the blockchain world, it's the tokenomic. What are the sort of the criteria around the financial criteria around the token? How do they structure it? What's the valuation? There's a lot of kind of decisions that need to be made, and some people have the ability to make those decisions themselves. Sometimes they need sort of advice either from a financial firm or legal firm, for example. And we have partners who can do all that.
Understood. And what is your outlook for 2023 in terms of the trading, in terms of the market in general, and what do you see in the future?
Yeah, I mean, we obviously 2022 was a challenging year. I mean, not only for the crypto space, but, traditional markets, the economy generally, it was a challenging year and it remains so at the moment. I mean, we're very excited about this year. I mean, we're just at the point of launching all these products and services. We're rolling them out at the moment. So in a post FTX world, this institutional regulated approach is popular. So we're quite well positioned in that respect. So we're quite bullish about the year because of our positioning in the marketplace. And how the economy will fare over the year, I mean, I think it's very difficult to call. I mean, there's certainly signs that interest rates may come down. There are signs that there is some stability returning, and hopefully in the crypto space too, we'll get a bit of sort of, security coming back into that space. I mean, it's interesting talking to people involved in the crypto world. I think those that are already in the space are remaining in it, but they're just being a little bit more cautious. I think those that were looking at potentially getting involved with it have taken a step back and are kind of waiting to see. So we kind of hope some stability returns, that there are no more scares to come out around the crypto space, and that, we'll get a bit of stability and we'll start to see some more interest coming back into it again.
Very cool, Simon. Tell me about the connection of this institutional world of digital assets that you're describing and DeFi financial operations, or decentralized, I would say, anything related to, let's say, liquidity pools or yield farming. And because I've seen institutions engaging in these activities, is there a space to connect the two?
Yes, I think there is. I mean, I think, again, I think what's being pioneered in the DeFi space is really interesting and exciting, particularly around, staking, lending, borrowing, yield farming, sort of leveraging new technology to do these things in different ways, DEX exchanges, automated market makers. There's a lot of interesting things there. I mean, arguably, quite a lot of it should probably be regulated, but the regulators haven't caught up with it yet. But that's often the case. Technology sort of leads the way and then the regulators catch up. So I think, we'll see what happens as regulation potentially kick in. But we're very interested in what is happening there. I mean, the minute we're centralized, and that's really because to be fully regulated, regulators like to see some counterparty that they can hold to, hang something on and hold to court around what's going on. So we're centralized at the moment, but we certainly believe that there's all sorts of interesting opportunities, particularly around sort of staking and lending, things like that in the DeFi world. And that's a project for us this year, is to look at launching potentially, but probably with some partnerships with partners we're talking to, sort of, again, institutional regulated DeFi products and services. And there are definitely things that can be done there. And that's something that we will be looking at this year.
All right. Fantastic. Is there anything you want to share with us that you haven't shared, and maybe about your plans at Archax and where you guys see yourself?
Yeah, I mean, I guess there's kind of one area we haven't touched on yet. And I think, there's been a lot of talk around digital securities and digital market, and when are the institutions going to get involved? And, there's been a lot of sort of pent up demand and people waiting for that to happen. I mean, we closed our Series A raise towards the end of last year. And, our lead investor and now largest external shareholder was Aberdeen Asset Management, a massive asset manager based here in the UK, but a big global player. And I think the fact that they have invested in a business like Archax is very interesting and is a sign of a really large, relatively conservative, traditional financial markets institution getting involved in the digital space. And the reason they've invested in us is because they can see that, in 5 years, 10 years, this is the future, and they want a path to be, to get to that future. And we're working with them on all sorts of interesting projects, where they want to create digital tokenized versions of their funds. So the first one we're working on with them is a digital version of their multi-billion-dollar money market fund. Now, that would be a really interesting instrument to have available in the digital space, crypto space. We're also working with them on a range of crypto ETPs. So these are exchange traded products where, you hold Bitcoin and you issue a regulated security type instrument that has an ISIN code. It just looks like a very traditional instrument so it's very palatable to institutions, but it gives you, it acts as a proxy for the underlying cryptocurrency like Bitcoin. So it gives you exposure to Bitcoin in a very kind of regulated way. And I think those kind of instruments, creating interesting structured products that make some of they'll take the benefits of the crypto technology and make some of these new crypto instruments available to the institutional space is really interesting. And that's certainly a focus for us this year, and particularly, in our partnership with Aberdeen Asset Management.
Gotcha. Well, that's super interesting. And definitely, I think ETPs is really how you could put a bunch of new technologies within the products that are inside the ETPs. And combine them in a way that's, like you said, palatable to institutions, but on the underlying side, there could be democratized products that, individuals and smaller funds, institutions can invest in. And then all of that can gain liquidity through more traditional exchanges, or even interbank trading, and just the way that institutions, do transactions.
Exactly. I think those kind of instruments, they provide a window into this new world in a very comfortable, safe, regulated way. So it's an easy way for institutions to put a toe in the water, if you like.
Exactly. Well, I love it, Simon. There's so much information, contained within half an hour that just gives somebody a bird eye view, and then a more detailed to kind of dive into the world of trading and the digital securities and regulation and where we're going with that. So I really appreciate you coming on. Thank you. We'll do this again sometime.
Thank you. Great to talk to you.
Very cool. So thanks for joining on BlockSolid podcast. You can find us on Spotify, Apple Podcasts, or by visiting our site at solidblock.co/podcast. Simon, where can somebody find Archax and start working with you guys?
Yeah, archax.com is our website. So that's a great place to start. And, we do a lot on social media too. So you can follow me on LinkedIn, Twitter also. Yeah, archax.com is a good place to start.
Fantastic. All right. Have a great Friday.
Great. Thanks very much, Yael.
Thanks. Bye.
Bye.